fellow YouTubers. On today's video, I'd like to go over what types of tax liens are there and what to do next when you encounter them. Making money in wholesale properties. Before we can buy anything, we have to know a few things about judgment liens. I realize that it's always all about the Benjamins, but you have to do your homework to make sure you're not caught up short. So in this video, I hope to go over some tax liens, otherwise known as judgment liens, that can help you out to avoid any problems. There are basically 6 types of liens we're going to go over today that you need to be made aware of. One of them is municipality liens, IRS liens, home association liens, medical liens, credit card liens, and property tax liens. Understanding the liens. Municipality liens, also known as code violations, these liens add up. They are a daily fine associated with these liens. However, you can negotiate these liens down. So once you acquire the property, let's say the individual was fined $100 for not cutting his grass every day, that can add up kind of quickly. You can negotiate with the county to bring that price down once you acquire the property. You want to negotiate these numbers because let's say you have a sale, but yet you have this lien on this property. You want to try to take care of it as quickly as possible so you can move on forward with the property and sell it and make your money back. IRS liens. IRS liens, the IRS has to be notified in writing that the property is going on the deed auction. The IRS has 120 days to act on the property if they want it. What the IRS will do is lift the lien and they will go on after whoever the taxpayer is. The IRS does not have a department that deals with deeds and houses that are distressed. So most of the time you just contact them, let them know the situation, and the IRS lien will come off. Home association liens. Home association lien, they survive the auction just as municipality liens do, and you'll have to deal with them. You'll have to haggle with them to bring the prices down. You can negotiate these types of liens, and you have to go reach out and contact the home association to work with them to bring their numbers down. So let's say a person didn't pay their home association and they owe $12,000, but you're not willing to pay $12,000. You can say, look, I'm willing to pay $7,000 and work your way there. Understanding further these liens. There's medical liens, and these come off. You have to contact the owner of the medical lien and have them lift the lien on the property and explain to them that the property is going through the foreclosure process. You also have credit card liens, which will not survive the foreclosure process. When the credit card company claims that Mr. Smith owes money, the property goes through the foreclosure process. The credit card company would have to go to Mr. Smith directly to recoup their losses. However, sometimes offering a small amount can make them go away. Why would you do this? You would offer them a small amount because let's say you have this lien on the property itself, but you have a sale. So if you can clear this out for like $5,000, let's say hypothetically, and you're standing to make $20,000 or $30,000 by clearing this lien, sometimes it behooves you to just pay it off and move forward so you can recoup and work on your collecting your dollars here. Property tax liens. This is how most homes end up at the auction. By not paying your property taxes, how most of these homes end up at the tax deed auction in the first place. When a person doesn't pay their home taxes, what happens is, of course, it goes through the lien process. But once the lien process is done, it goes to the tax deed process. Each state varies. I happen to live in the state of Florida, which is a 3-year redemption period. And after the 3-year redemption period, the home can go through the foreclosure process and then start being bidded on the tax deed auction. Keep this in mind when dealing with these types of liens. When you get your title search, when it comes back from your title company, you want to make sure the information is correct. There's many times that the information might not be correct. You want to review that information that the title company has sent you because you want to check for errors. The wrong John Smith could be on your paperwork. Your individual could be John R. Smith, but yet the paperwork says John P. Smith. Make sure you do your due diligence Make sure it's the same person as the homeowner, because mistakes do happen. Sometimes there are mistakes placed on the liens, and this could cost you a hassle later on down the road. So make sure you do your homework on these properties. The liens that we went over today we went over these types of liens. We went over the IRS lien, which basically you contact the IRS. Again, they have 120 days to respond if they're interested in the property. The credit card liens, they will drop off. You have the property liens, that is the most common for people not paying their taxes. You have municipality liens, also known as code violations. The example I gave, they didn't cut their grass and they're being charged $100 a day. You have the home association liens. You have to negotiate their price so they can come down. Again, the homeowner didn't pay their home association and they owe $12,000. You can negotiate with the home association, have it bring it down, let's say to $7,000. You have the medical liens. These do drop off after it goes through the process. The key here is to negotiate the liens so that you can still acquire the property. Remember, you're trying to make money here, so make sure you do all of your homework. So do your due diligence. Your due diligence will pay off in the long run, and then you'll be able to acquire a property and live a happy life. If you like this video and like to see future videos of this type, please give me a thumbs up and don't forget to subscribe. Thank you for watching.